2 words, posted on Truth Social 3 hours ago. And those 2 words just locked in the single most important variable for silver's price in the entire month of March. Not the jobs report, not the CME margin hike, not the Fed. 2 words from the President of the United States. Unconditional surrender. I am going to tell you exactly what Trump said, exactly what Iran said back, exactly what the military picture looks like on day 7 of this war, and then I am going to show you the precise mechanism by which those 2 words connect directly to what silver does next week. Because most people watching the price chart today have no idea that the decision that determines silver's next major move was just made in Washington. Not by the Fed, not by the CME. By a Truth Social post. Let's build it from the ground up. Every number I give you today is public and verifiable. Links to all sources are in the description. Section 1. What Trump actually said. The exact words and what they mean. President Trump posted on Truth Social today the exact words, "There will be no deal with Iran except unconditional surrender. After that, and the selection of a great and acceptable leader or leaders, we and many of our wonderful and very brave allies and partners will work tirelessly to bring Iran back from the brink of destruction, making it economically bigger, better, and stronger than ever before. Iran will have a great future. Make Iran great again." The Sunday Guardian. I need you to understand what that statement does and does not mean, because the market is reacting to the headline and missing the mechanics. Trump told Axios today that his demand for unconditional surrender could mean the complete destruction of the regime's military capabilities, not necessarily a formal surrender ceremony. He said, and I am quoting directly, that it could be that Iranians announce it, but it could also be when they can't fight any longer because they don't have anyone or anything to fight with. Light Finance White House Press Secretary Caroline Leavitt further clarified. She said unconditional surrender means Trump determining that Iran can no longer pose a threat to the U.S. and its troops in the Middle East. Leavitt listed the U.S. objectives as destroying Iran's navy, eliminating its ballistic missile threat, ensuring it cannot obtain a nuclear weapon, and weakening its regional proxies. And then she said something that the market has not fully priced in. She said the U.S. expects the war to go on for approximately 4 to 6 more weeks. Fortune. 4 to 6 more weeks. From today, March 7th. That takes this war into mid to late April. Let me show you why that timeline is the most important number for silver investors that came out of Washington today. Section 2. What Iran said back, and why it matters more than Trump's post. Here is where most coverage is missing the actual story. Iranian Foreign Minister Abbas Araghchi went on NBC Nightly News today and said Iran is not asking for a ceasefire and is ready for any U.S. ground invasion. He also denied any behind-the-scenes contact with U.S. officials to end the war. One India read those 2 statements together. Trump demands unconditional surrender. Iran's foreign minister says they are ready for a ground invasion and there are 0 back-channel talks happening. That is not 2 sides moving toward resolution. That is 2 sides publicly announcing they are moving toward escalation. Earlier today, Iranian President Masoud Pezeshkian had said that some countries are engaging in mediation efforts and that Iran is committed to peace in the region but prepared to defend itself. He said mediation should address those who underestimated the Iranian people and ignited this conflict. One India. So you have the Iranian president signaling openness to mediation while the Iranian foreign minister says no ceasefire and no talks. That internal contradiction inside the Iranian government tells you something critical. There is no unified Iranian position on how this ends, and a war with no clear exit path on either side, with one side demanding unconditional surrender and the other side saying bring on the ground invasion, does not resolve in days. It resolves in weeks or months. White House says 4 to 6 more weeks. That is not the market's base case as of this morning. Section 3, the military picture. What is actually happening on the ground right now? I want to give you the specific military data because the price of silver is directly connected to how much of Iran's military capability remains intact. Here is why. U.S. CENTCOM said the U.S. military has struck more than 3,000 targets inside Iran since Operation Epic Fury began on February 28th. Fortune Admiral Brad Cooper, commander of U.S. Central Command, said that in just the last 72 hours, America's bomber force struck nearly 200 targets deep inside of Iran, including around Tehran. He confirmed that B-2 bombers dropped dozens of 2,000-pound penetrator bombs targeting deeply buried ballistic missile launchers. Cooper stated the campaign represents the largest U.S. military buildup in the Middle East in a generation, with more than 50,000 troops, 200 fighters, 2 aircraft carriers, and bombers participating. FX Empire. CENTCOM said that over the last 24 hours compared to where they were at the start, ballistic missile attacks from Iran decreased by 90%, and drone attacks decreased by 83% since day one. Metals Daily. That data point is the most important military number for silver investors. Iran's offensive capability is degrading, ballistic missiles down 90%, drones down 83%. But degrading offensive capability is not the same as surrender, and it is not the same as Hormuz reopening. Operation Epic Fury began at 01:15 Eastern Time on February 28th. In the first 24 hours, American B-2 bombers, stealth fighter jets, and other weapons struck more than 1,000 targets. The prioritization of Iranian naval assets was intended not simply to reduce Iran's capabilities at sea, but also to preserve freedom of navigation through the Strait of Hormuz, FX Street. Iran's navy has been largely destroyed, but the Strait of Hormuz is not a military problem anymore. It is an insurance problem. Commercial ships cannot get coverage to transit it. That is an economic closure that military action cannot immediately fix. Even if Iran's ability to attack ships drops to near zero, insurers will not reinstate coverage until a formal end of hostilities is declared. And with Trump demanding unconditional surrender and Iran's foreign minister saying, "Bring on the ground invasion," a formal end of hostilities declaration is not happening this week or next week. The White House said 4 to 6 weeks. Section 4, the Hormuz math, what 4 to 6 more weeks means in dollars. Let me connect the White House timeline directly to the commodity numbers because this is the precise mechanism that translates a Truth Social post into a silver price move. The Strait of Hormuz handles approximately 20% of the world's daily oil consumption. Traffic through Hormuz has evaporated after insurers told ship owners they would hike coverage prices for vessels in the Gulf region. Intellectia.ai Goldman Sachs head of oil research Don Striven explained that the global market normally relies on spare capacity in Saudi Arabia, the UAE, and Kuwait to buffer against price shocks. But those barrels typically must flow through the Strait of Hormuz to reach global buyers. As long as the strait remains compromised, that spare capacity cannot be physically deployed. Light finance. Furthermore, while the U.S. Strategic Petroleum Reserve could be used as a textbook response to sustained disruptions, the SPR currently holds around 415 million barrels, more than 200 million barrels lower than it was prior to the 2022 energy crisis. Light finance. The spare capacity buffer is trapped behind the closed strait. The SPR buffer is 200 million barrels below where it was the last time this tool was deployed, and the White House just told us the war continues for 4 to 6 more weeks. Goldman Sachs estimates an $8 per barrel risk premium already embedded in crude oil prices, corresponding to a 1-month full halt in Strait of Hormuz flows. A full closure lasting a month or more could push crude toward triple digits. Goldman's analysis suggests 15 to 25% upside for gold based on historical correlations from the 2022 Russia-Ukraine war if disruptions persist. Yahoo Finance. In an extreme scenario, if Iran were to attack oil facilities in other Gulf countries and disrupt a significant portion of the roughly 18 million barrels of crude oil supplied daily from the region, international oil prices could experience a historic surge, potentially rising above $130 per barrel. FX Street. U.S. crude oil recorded its biggest weekly gain on record dating back to the inception of the West Texas Intermediate Oil Contract in March 1983. One India, the biggest weekly gain in WTI history, not since 2022, not since 2008, since 1983. That happened this week, and the White House just said 4 to 6 more weeks of this. Section 5, the Fed trap. Why this war timeline is the single most dangerous scenario for inflation. Here is the mechanism that most silver analysts are describing correctly at the surface level, but not fully connecting to the Fed's actual decision-making process. The rising cost of oil and gas due to disruptions in the Strait of Hormuz is likely to increase inflation worldwide. This might also prompt the U.S. Federal Reserve to keep interest rates elevated, which creates a bearish pressure for gold and silver through the stronger dollar channel. Alan Chand. That is the surface level analysis. Oil goes up, inflation goes up, Fed stays hawkish, dollar stays strong, silver goes down. That is the simple version. Here is the more complete version. The Federal Reserve is already frozen. The March 18th FOMC meeting, 11 days from today, happens with oil at record weekly gain territory, with the NFP just printing minus 92,000 jobs. With a war the White House says continues for 4 to 6 more weeks, and with the Kevin Warsh nomination stalled in committee. The Fed cannot raise rates into a collapsing labor market. The Fed cannot cut rates into a 1983 scale energy price shock. The Fed is trapped between two impossible choices simultaneously. Pepperstone senior research strategist Michael Brown said it is not only the risk of escalation or broader conflict that markets must now discount, but also the considerably wider range of potential outcomes that now exist, given that kinetic action is underway. Bullion Vault. A wider range of potential outcomes is the technical way of saying the Fed has no clean policy path. And a central bank with no clean policy path, facing an energy shock that adds to inflation while a jobs market that is deteriorating, is a central bank that loses credibility. And when central banks lose credibility, hard assets historically outperform. not because of a bullish case, because of a loss of confidence in the paper system that underlies the price of everything else. Section 6, the historical precedent. What wars of this scale did to silver? I want to give you the specific historical data because the pattern across multiple geopolitical crises tells a consistent story that the current situation fits. The World Gold Council notes that gold has historically outperformed during periods of geopolitical tension with average returns of 7.5% in the 6 months following major events. Gulf War 1990 to 1991, gold rose 7.5% in 6 months. The September 11 attacks in 2001, gold gained 5.9% in the following month. Russia-Ukraine war in 2022, gold rallied 8.2% in the first month of escalation. Red Sea attacks in 2024, gold up 4.5% as shipping disruptions raised inflation fears. Yahoo Finance silver consistently outperformed gold in each of those episodes during the initial shock phase because silver has a dual identity. It is both a safe haven asset and an industrial commodity with inflation sensitivity. When geopolitical shocks combine with energy inflation, silver tends to outperform gold in the first 30 to 60 days before industrial demand recession fears start weighing on the outperformance. We are currently in day 7 of that 30 to 60 day window. Silver spiked to $96.40 on day 1 when the Iran war opened. It then crashed back toward $80 to $83 as the CME margin hike and the Warsh nomination compounded with the paper market's volatility. It is recovering toward $84 to $85 today. The 12-day Israel-Iran war in June 2025 ended with a U.S.-brokered ceasefire. This conflict has already lasted 7 days, with the White House projecting 4 to 6 more weeks and both sides publicly rejecting talks. The June 2025 pattern is the wrong historical model for this conflict. Section 7, the precedent Trump himself set, and why it is both bullish and cautionary. I need to give you a specific data point that the bears are using correctly and the bulls are dismissing too quickly. The last time Trump demanded Iran's unconditional surrender was during the 12-day Israel-Iran war in June 2025. Trump twice demanded Iran's unconditional surrender during that conflict. The conflict ended with a U.S.-brokered ceasefire as Washington increased pressure. Metals daily. That is the most important historical precedent in this entire analysis. Trump demanded unconditional surrender in June 2025. The war ended in 12 days with a ceasefire. He is demanding it again now. The question is whether this conflict follows the same pattern or whether the conditions have changed enough to produce a different outcome. Here is what is different this time. In June 2025, the conflict was between Israel and Iran. The U.S. was supporting but not directly engaged. This time, the U.S. launched Operation Epic Fury directly with 50,000 troops, 2 aircraft carriers, B-2 bombers, and targeted the killing of Khamenei on day 1. FX Empire direct U.S. military engagement at that scale is not resolved in a 12-day ceasefire, the same way a U.S.-supported Israeli operation is resolved. The political investment is fundamentally different. Trump said he wants to be personally involved in selecting Iran's next supreme leader to ensure the successor does not pursue policies that lead to another war. Fortune. That is not a condition that can be met in days or even weeks. Selecting a supreme leader for a nation of 90 million people after assassinating the previous one is a process measured in months, not days. The June 2025 ceasefire analogy breaks down at this level of political ambition. The bear case says Trump blinked in June 2025 and will blink again. The bull case says the scope and scale of this operation makes blinking structurally more difficult this time. Both positions are defensible. The White House timeline of 4 to 6 weeks is the data point that separates this from June 2025. In June 2025, there was no White House press secretary giving a 4 to 6 week operational estimate on day 7. Section 8, the bear case. Why silver could fall from here despite everything. I always give you both sides. The honest analysis demands it. The bear case on silver in this war scenario is not stupid. It is actually well constructed, and you need to hold it alongside everything I have just shown you. The rising cost of oil and gas is likely to increase inflation worldwide and might prompt the Federal Reserve to keep interest rates elevated, which is bearish for gold and silver through the stronger dollar mechanism. Alan Chand. This is the stagflation trap for silver specifically. Oil-driven inflation forces the Fed to stay hawkish or even hike. A hawkish Fed means a stronger dollar. A stronger dollar means silver priced in dollars is more expensive for every buyer outside the United States. Industrial demand from China, India, and the rest of Asia faces this headwind directly. Approximately 40 to 50% of China's crude oil imports and about 30% of its LNG imports pass through the Strait of Hormuz. FX Street China is the largest industrial consumer of silver. An energy shock that hits Chinese manufacturing at this scale reduces Chinese industrial demand for silver simultaneously, with the inflationary pressure pushing the Fed toward hawkishness. Silver is half investment metal, half industrial. War fears boost the investment side, but oil shocks and stock sell-offs raise recession worries, which hurt industrial demand. That is why silver swings harder than gold. Light finance. The bear case is that the industrial demand recession fear from the oil shock overwhelms the safe haven bid from the war itself. That is exactly what happened between Monday's $96.40 spike and Tuesday's crash back toward $87 to $88. The market resolved that tension in a single session with a 7% intraday swing. That level of volatility in either direction remains possible for as long as this war continues. Edward Meir at Marex framed it precisely. He projected a quick spike, then drift lower if oil flows stabilize, saying markets price in quick wins, and if Trump's 4 to 5 week timeline holds and Iran's regime cracks without closing Hormuz for good, a sharp pullback is possible. Light finance. The bear case requires the conflict to resolve faster than the White House's own 4 to 6 week estimate, or for Iran's retaliatory capacity to collapse so completely that the market prices in Hormuz reopening within 2 weeks regardless of formal surrender. The 90% reduction in Iranian ballistic missile attacks makes the second scenario more plausible today than it was on day 1. Section 9. What to watch. All free, all public. I sell nothing. No memberships, no Discord, no paid alerts. If you see my name on a paid service, that is a scam. You find me here on YouTube and on X. Data breaks on X when it happens. Here's your specific watch list through next week. Every item is free and public. Al Jazeera Live War updates. Updated minute by minute. Specifically watch for any back-channel diplomatic signals that contradict Araghchi's public no ceasefire statement. Trump's public position and Iran's public position can both be hardline, while quiet diplomacy happens through Oman or Qatar. Any report of Omani or Qatari mediation activity is the first signal that the 4 to 6 week timeline might compress. CENTCOM official statements, published on their X account and website. Specifically watch for the daily operational update on Iranian missile and drone attack frequency. The 90% reduction in ballistic missile attacks is the metric that tells you whether Iran's capacity to threaten Hormuz shipping is genuinely degrading or temporarily suppressed. Hormuz insurance market data. Watch Lloyd's of London and the Joint War Committee War Risk Area designations. When the Joint War Committee removes the Persian Gulf from its war risk area, that is, the signal insurers are starting to price normal coverage again. That is the single most important non-military indicator for when Hormuz physically reopens to commercial traffic. WTI crude oil spot price. The $80 to $85 per barrel range is where markets are pricing approximately a 4-week disruption per Goldman Sachs. If WTI breaks above $90, the market is pricing a longer disruption than 4 weeks, and the inflationary pressure on the Fed intensifies significantly. If WTI drops below $75, the market is pricing in either a faster resolution or demand destruction severe enough to offset the supply shock. CME FedWatch tool. Watch the July rate cut probability. If July cut odds drop below 40% on sustained WTI strength above $85, the Fed hawkishness channel starts actively suppressing silver through dollar strength. If July odds stay above 60% despite oil strength, the market is betting that labor market deterioration from NFP minus 92,000 outweighs the inflationary pressure. That is the bull case for silver staying above 85. COMEX registered silver inventory. Updated daily. The vault drain continues regardless of this war. Registered silver down 47% since October 2025. Watch whether the physical supply story accelerates during paper price weakness as physical buyers step in at these levels. Section 10. The honest conclusion. Here is the full picture as of Saturday morning, March 7th, 2026. Trump rejected the idea of a diplomatic off-ramp to the Iran war today, saying there would be no deal with Iran except unconditional surrender. J.P. Morgan. Iranian Foreign Minister Araghchi said Iran is not asking for a ceasefire and is ready for any U.S. ground invasion. He denied any behind-the-scenes contact with U.S. officials. One India White House press secretary, Caroline Leavitt, said the U.S. expects the war to go on for approximately 4 to 6 more weeks. Fortune U.S. CENTCOM has struck more than 3,000 targets inside Iran since Operation Epic Fury began February 28th. Iranian ballistic missile attacks down 90%. Drone attacks down 83% from day 1. Fortune U.S. crude oil recorded its biggest weekly gain since the WTI contract was created in March 1983. One India Hormuz at near zero commercial traffic. Insurance removed. Spare capacity trapped. SPR at 200 million barrels below 2022 levels. Goldman Sachs projects 15 to 25% upside for gold if disruptions persist, based on historical correlations from the Russia-Ukraine war. Yahoo Finance Silver, which has both safe haven and industrial exposure, sits at the intersection of both forces simultaneously. NFP minus 92,000, Fed frozen, Warsh nomination stalled in Senate committee. March 18th, FOMC 11 days away. 3 scenarios for the next 4 to 6 weeks. Scenario 1, White House timeline holds. War continues through mid-April. Hormuz stays economically closed for 4 to 6 weeks. WTI breaks above $90. Inflation expectations reprice higher, but labor market continues deteriorating. Fed is trapped. Dollar volatility creates silver volatility. Safe haven bid dominates industrial demand fear. Silver recovers toward $90 to $100 range over the next 3 to 4 weeks. Scenario 2. Iranian capacity collapses faster than expected. Regime fractures from within. Trump declares victory in 2 to 3 weeks rather than 4 to 6. Market prices in Hormuz reopening. WTI drops back toward 75s. Safe haven bid evaporates. Silver tests $78 to $80 support. Recovery delayed, but physical supply deficit story remains fully intact. Scenario 3. Escalation beyond current scope. Iran attacks Gulf oil infrastructure at scale. Houthis expand operations to Bab al-Mandab. Oil above $100. Inflation shock severe enough to trigger Fed emergency action. This is the tail risk scenario where silver's dual identity as safe haven and inflation hedge both activate simultaneously. This is the scenario where $200 silver in March stops being an absurd question. What I can tell you with certainty is this. The 2-word Truth Social post from this morning has locked in the most important variable in the silver market for the next 4 to 6 weeks. Not the Fed, not the CME, not the vault data, the length of this war, and the length of this war was just set by the President of the United States at 4 to 6 more weeks, confirmed by his press secretary on live television today. That is not a prediction. That is a data point from the White House. Your job is to hold that data point alongside the CME delivery reports, the COMEX vault numbers, and the Hormuz insurance market data, and let all of them together tell you the story. Invest with logic, not hype. Protect your capital. 2 words on True Social do not move markets by themselves. What moves markets is the mechanism behind the words. Today I showed you the mechanism. The rest is arithmetic. Drop epic fury. Watch in the comments if you are tracking the war developments through this weekend alongside the silver price.